Now looking at the NSE, it has staged quite an impressive performance this week, touching a 4-month high in yesterday's trading session and extending gains once again today. What did you make of the bourse's performance this week?
As expected, we did expect the bourse to gain this week because of the local investors have started participating more and more in looking at fund managers that have started to get more and more into the market. This is because of the declining interest rates being offered by the government papers. That's why they're getting into the equities market at the moment.
Now looking at some of the stocks that made moves today, looking at Uchumi supermarkets really losing steam in today's trading session, falling back 5% to 13 shillings and 90 cents. What are your thoughts on that company? We have seen it run for this year.
Uchumi has made a significant run. It's gained about 84% in the past 3 months, which is very, it's a good job. Going forward, we expect the rally to wane a bit, to relax a bit. The decline today is because of investors in Uchumi profit taking, basically.
Now looking at a stock, East African Portland Cement, which started trading yesterday after 2 months of suspension over governance issues. I asked the broker yesterday whether could perhaps be seeing investors plowing into the stock, but he wasn't that convinced. What are your views on the company going forward? We did see it gain about 7.14% to sit at 60 shillings in the session.
Yeah, if you notice, that gain to 60 shillings was just because of one trade. It traded only about 100 shares today. I do concur with the analyst who conveyed that EAPC isn't really, it's not really convincing at the moment because the political wrangles are still there. We still don't get a clear picture of the way forward, because if you look at the shareholding structure, it's just 52% of EAPC is owned by the government. Basically, it basically means that the EAPC directors may have that temptation of fulfilling governmental interests instead of fulfilling their shareholder interests. That's one risk in EAPCC. When you look at it, also has a high debt to equity ratio. If you compare it to its peer companies in ARM and Bamburi, it's standing at the debt to equity ratio stands at 62%. Most of it is yen denominated, therefore there's also foreign currency risk in that. If you look at its expansion strategy, basically there isn't any compared to ARM, which is planning to build 2 plants in Tanzania and exploit that market in Tanzania. Bamburi is already strategically positioned in Uganda to take advantage of the market in Uganda. Therefore, going forward, EAPC not really convincing enough.
Now, looking at those 3 stocks, which would you say amongst the 3 is your favorite stock within that sector?
That's really tough. It definitely is going to be between ARM and Bamburi. Bamburi recently closed its books on the 23rd. ARM is closing its books on 24th July. If you look at Bamburi, they're paying out a dividend of 8.5, which is really, the dividend yield is really good. ARM is paying out a dividend of 2 shillings. Between the two, I'd pick ARM of Bamburi, simply because ARM represents, if you look at the, looking at the 3-month price performance, ARM has been picking up at about 15%. If you look at Bamburi, it lost about 0.7%. Going forward, I think ARM should be a good bet. Together with Bamburi, I'm not disputing that Bamburi is a good stock to invest in.
All right.
Yes.
Bamburi and ARM to investment in, but let's talk through the Kenya Airways rights issue. Talk us through performance on that side. We saw the stock falling back in the session, but sitting at that 14 shilling mark.
Yes, the rights issue, as expected, it's been a slow pickup by investors, local investors, basically. The fact that they continue with this rights issue is just because KLM and the government promised them that they will pick up their rights issue. And we hear that 20%, another 20% will be also be picked up by IFC. Going forward, we do expect increased activity as the deadline nears. This because current trends, historical trends in rights issue shows that as the deadline nears, activity picks up. This is because of institutional investors would want to protect their shareholding proportion, so therefore they will need to exercise their rights issue so as to protect their dilution and also to reduce their average cost in their portfolio for this stock.
So Moses, I just want to chat about next week. What should investors be looking out for in next week's trading session? Could we perhaps see this rally on the market continuing into the following week?
Chances, I don't see the rally continuing in the next week. It will slide, but slightly, because we expect most of these stocks, their books closure in April and May. Therefore, like this week, there have been about 5 stocks which have had their books closure just yesterday and today in National Bank of Kenya, TransCentury. Therefore, we expect their prices to dip slightly. This will have an effect on the NSE performance. It will slightly dip, but I don't expect it to drop below 33.50 next week.
We have run out of time. Thank you so much for joining us. That was Moses Waireri. He's a research analyst from Genghis Capital, joining us from our studios in Nairobi.